In this Learning Lounge session, we'll explore the QuickBooks integration feature of Dragonfly. Using this integration tool, you can export your point-of-sale data, as well as your order receipt data, to QuickBooks. This will help you to keep your QuickBooks data in sync with the Dragonfly sales data and product inventories. Each time a point-of-sale record is exported, QuickBooks will create an invoice record. The invoice will include each line item in the sale, including tax. These are then offset by the payments made, bringing each invoice total back to zero. The invoice is then paid from one of your income accounts. If the sale has a net negative value due to returned items, QuickBooks will create a receipt record rather than an invoice. When order receipt records are exported to QuickBooks, QuickBooks will create a receipt record. To help you manage your inventory in QuickBooks, there is also an option to create journal entries for each point-of-sale record. These will create credit entries in your cost of goods sold account, and a corresponding debit in a designated asset account. Before you can send Dragonfly data to QuickBooks, you must take care of some setup requirements. The first task is to make sure you have defined the accounts and items in QuickBooks that Dragonfly will communicate with. Let's take a few minutes to explain how Dragonfly communicates with QuickBooks. We'll start with your QuickBooks accounts. You can use existing accounts if you have already created them, or create new accounts. If you have already used the QuickBooks conduit with TRS, then we suggest that you use the accounts that TRS was using. First, you need an account with the type set to income. Each invoice or receipt that is created will be assigned to this account or one of its sub-accounts. Your setup should have at least one bank type account. If you want to keep payment types separate, you can use a separate account for each payment type. These could include accounts for cash, check, credit cards, debit cards, miscellaneous, or non-sale, which is used for cash in or cash out transactions. If your store issues and accepts gift cards, and you want to track their usage, create an account with the type set to other current liability. When you sell a gift card, the payment made will be added to this account, and when the gift card is used to pay for a purchase, that money will be subtracted from this account. If you accept deposits or layaways and you want to track them separately, create another account with a type set to other current liability. When the deposit or layaway payment is received, it will be added to this account, and when the customer completes the payment and receives the product, the money from this account will be applied to the purchase. If your store offers credit accounts for customers, create an account with a type set to other current asset. These are the opposite of the gift card and deposit accounts. Payments made from the account are subtracted from this account, and customer payments made on their store account are added to this account. Finally, if you are tracking your inventory in QuickBooks, create a top-level account with the type set to other current asset, and another top-level account with the type set to cost of goods sold. These accounts will be used for journal entries. Tracking at the more detailed level offers some advantages. By creating a separate account to track deposits and layaways, incoming payments as well as the outgoing money when the deposits are applied to purchases, can be tracked separately from your main income amounts. Similarly, a gift cards account will help you track how much you have in outstanding gift cards, and payments made with those gift cards. Finally, if you allow customers to charge purchases to their own store account, using a separate account for those will make it easier to see how much credit you have extended. When Dragonfly creates QuickBooks invoices or receipts based on point-of-sale transactions, the communication is done through a set of QuickBooks items. Each of these items is linked to one of the QuickBooks accounts we just discussed. The number of items that you create will depend on how granular your bookkeeping is in QuickBooks. For example, you could create a single item for all the payment types that you support, and link them all to a single bank account. On the other extreme, you could create an item for each specific payment type, as well as items for gift cards used for payment, gift cards issued, deposits received, and transactions with customer accounts. We suggest that the detailed approach is used to give you the greatest clarity on where your assets and liabilities are distributed. We recommend the following. First, create an item for each of the cash, credit, debit, check, miscellaneous and non-sale payment types. Assign each of these items to one of your QuickBooks bank accounts. These payment types represent income with no associated liabilities. If you will be tracking credit card charges by the individual charge card brand, create an item for each of the credit card brands you will accept. Be sure that each item name matches exactly with the name of the credit card as you have entered it in the lookups table, under the Charge Card Types group. If you accept gift cards for payment, create an item and assign it to one of your QuickBooks current liability accounts. You can create separate items for gift cards sold and gift cards redeemed, or use a single item for both. If you use two items, they should both be assigned to the same gift card liability account. If you accept deposits or layaways, create one item for these, and assign it to one of the QuickBooks current liability accounts. Dragonfly does not currently distinguish between deposits and layaways when exporting the sales. If you offer store credit accounts to your customers, create an item for store account transactions and assign it to a current asset account. Finally, create an item with the type set to sales tax item, for each of the sales tax types that your store charges. Once the accounts and items have been created, the next step is to let Dragonfly know which accounts and items to use. Before continuing, be sure that QuickBooks is open, and the company file that you want to export to is loaded. From the Store Administration folder in the Navigator, click on the QuickBooks Options to open the Options form. The first time you attempt to connect Dragonfly to QuickBooks, the Certificates form will appear, giving you the chance to authorize Dragonfly to communicate with your QuickBooks company file. Click on the option labeled Yes whenever this QuickBooks company file is open, then click Continue. Click Yes at the secondary confirmation, then click Done on the confirmation pop-up. With this option selected, you will not see this form again when performing exports. The QuickBooks export options are divided into 5 folders. In the General folder, from the General Sales Account drop-down, select the top-level income account where your sales will be exported. The Invoice Prefix field lets you add a prefix to the number that is assigned to each invoice that is created. Select the name from your company file from the QuickBooks Customer drop-down. The Journal Entries folder defines the options for creating journal entries in QuickBooks. If you want journal entries to be created when sales records are exported, check the Create Journal Entries checkbox. The journal entries can be created at 3 different levels. If you choose the All-in-One option, all journal entries will be created in the top-level expense and asset accounts. If you choose the Major Departments option, a journal entry pair will be created for each top-level department for the items included in the sale. The export will automatically create a sub-account for each top-level department, as they are needed. If you choose the Each Department option, a journal entry pair will be created for each department and sub-department found in the sale. These department sub-accounts will be created automatically as they are needed. It should be noted that if you have more than 2 levels of departments, this option could result in a large number of sub-accounts in QuickBooks. From the Expenses account drop-down, choose the Cost of Goods Sold account that you created. From the Assets account drop-down, choose the other current asset account that you created. The Payment Types folder includes a drop-down for each of the payment types that Dragonfly supports. If there is a payment type that you are not using, you can leave that selection blank. The Point of Sale Items folder has an option for each of the special types of payments that might be included in a point of sale transaction. For each option, select the QuickBooks item that you want to associate the sold item or payment with. Deposit and layaway payments are mapped to a single item. The non-sale item is used for cash-in or cash-out transactions. The gift card option here is specifically for gift cards that are sold, rather than redeemed. But you can map both gift card options to the same item, if you prefer. Finally, in the Tax Options folder, you will see an item for each tax rate that you have defined in Dragonfly. Map each of these to the corresponding tax item in QuickBooks. Once you have created all the desired accounts and items in QuickBooks and mapped them to their corresponding activities in Dragonfly, you are ready to begin exporting your data to QuickBooks. When you open Dragonfly's QuickBooks Export form, the status window will either display the company file that you currently have open in QuickBooks, or a message indicating that QuickBooks is not running. If you get this warning, open QuickBooks, and when the company file is fully loaded, click the Recheck QuickBooks Connect button on the Exports form to re-establish the connection. If successful, the information about the connected company file will be displayed. If you need to adjust the QuickBooks setup options we discussed earlier in this session, click the Change QuickBooks Export Options button to reopen the Options form. When you first set up your options, we suggest that you click the Check QuickBooks Setup button to identify if any of the setup options are missing. If any problems are found, a list of issues will be shown. Make the necessary corrections before initiating an export. The exchange of data between Dragonfly and QuickBooks is fairly straightforward and rarely has problems, but as a precaution, we recommend that you make a backup copy of your company file before starting an export. If something does go wrong during the export, you can revert to the saved copy rather than risking a partially completed transfer. But the exports are done one sale or receipt at a time, and each sale or receipt is marked as complete after being exported, so you don't have to worry about exporting something twice or missing an export. It should be noted that once data is exported from Dragonfly to QuickBooks, there is no way to reverse the export, other than manually deleting entries in QuickBooks. The export form provides options for exporting sales, order receipts, and inventory adjustments. Let's start with exporting sales. The first option is to export all sales after the last sale that you exported. The number and date of the last successful point of sale export will be shown when the form opens. You can accept this value or enter a different sale number to start after. Once you have entered the last completed sale export, click the Export Recent Sales button. Dragonfly will count the number of pending sales that will be exported and prompt you with a confirmation to proceed. Click OK to proceed with the exports or click Cancel to abort the export. If any of the sales fail to export successfully, they will be listed so you can examine the sale and then retry the export. If you have a specific range of sales that you want to export, you can enter the first and last sale numbers in the desired range, then click the Export Sales and Range button. A similar confirmation will be shown. If you want to export a single sale, enter the number of that sale in the Single Sale Export box and click the Export Single Sale button. If you wish to review the single sale before exporting it, enter the sale number, then click the View Sale button to open the sale in the point of sale form. Exporting sales will help you keep track of the products that you sell. But to fully track your inventory, you should also export the order receipts that you create. These receipts are exported in the same manner as exporting sales, as you choose to export recent receipts, a range of receipts, or individual receipts. The majority of changes to your inventory quantities will result from sales and received orders. But occasionally, you may need to make manual adjustments to your inventory numbers to account for lost, stolen, or damaged items or items sent to or received from one of your other stores. In order to keep your inventory as accurate as possible in QuickBooks, you should also export those adjustments. Simply enter the date range that you want to export, then click the Export Adjustments button to export all the adjustments in the specified date range.